Hello and welcome to Switzer Investing Insights brought to you by nabtrade. And today we have an interesting topic of BHP. Should you buy more or maybe should you buy less? Paul?
Well, I think it's interesting to note, Peter, just how big BHP is now part of the market. The table you can screen in front of you shows you the weighting of the top 10 companies. And BHP is over 11.7%, Peter. So it's huge compared to everyone else. It's 5 times almost the size of Rio and more than 50% bigger than Commonwealth Bank. So if you don't have BHP in your portfolio, or at least a weighted position, you're taking a lot of risk.
Explain to me what you mean by the weight, Paul.
Yeah, so if you've got $100,000, a portfolio of $100,000, if you are index weight, you'd have $11,700 invested in BHP.
Yep.
Had $5,000 invested in BHP or less, you'd be underweight. $15,000, you'd be overweight.
Okay.
So it's important. Look, weightings don't matter for a lot of stocks, but when they get really big, a company like BHP, because it is so big, if you don't have BHP in your portfolio, you take on a lot of what we call market risk, because if you get left behind and BHP really rallies, your portfolio is going to look pretty poorly. Conversely, you might not have any BHP, it may not be a bit of a dog, and you could be a hero, right?
Okay, so why has it been going up so strongly?
Well, really 2 reasons. The first reason, Peter, was that they unified both the Australian Limited Company and the UK PLC company.
Yeah.
And previously, the UK PLC company wasn't included in the Australian index. Now it's included in the index, and that's been responsible for the major jump.
Yep.
The second reason, Peter, is BHP's share price has been going up. If you see this chart in front of you, you can see that since October, November, the price has done pretty well. It's up over $50.
And also, because it's got so big, do fund managers, in a sense, have to buy it as exchange-traded funds, or they have to buy it?
Well, certainly the index-based funds, Peter, have to buy it, and that's one of the reasons. When the share price is going up, it tends to sort of be a little bit self-fulfilling because a lot of the index funds are buying. But even a lot of the active managers, and I'm not talking about your mid-caps, but some of your big active managers, your big Australian big super funds, who are managing billions of dollars of money, they'd be very well aware of BHP's market weighting. And to be honest, a lot of them don't want to take that much risk. In other words, they need to sort of have close to market weighting in BHP. Otherwise, they risked underperformance, and of course, in many cases, that could mean their investment mandate.
Are there other reasons people should be buying BHP?
Yeah, look, I think there are, Peter. Look, first of all, we know what's been happening with the commodity prices. BHP's also has first-class assets. It's the least cost or lowest cost producer now in iron ore globally of any of the major miners. It's been very sensible and restrained in terms of how it's managing shareholders' money. It's investing in what it calls sort of the low carbon minerals of the future.
It's going greener, isn't it?
So effectively things like nickel suddenly found a lot of prominence again, and it's investing in the potash project in Canada, which we use as fertiliser, so as a substitute for other materials. Look, I think a lot of things right, and shareholders are getting a huge whammy in terms of dividends. So a lot of things going right for BHP.
And some people would be buying it, and dividend funds would be buying it for the dividend.
Yeah, look, on a prospective basis, just paid a $2.08 dividend in Australia. Prospective basis yield this year about 7.7%. Next year's forecast to be lower. That's because most of the analysts think lower commodity prices next year, but still, forecasting around about 5.5%.
What about the risks?
Well, obviously the biggest risk is commodity prices, Peter. BHP has no control over the iron ore price or the copper price, and that's fundamentally why it's been going up. So if we know that the global economic growth has been strong. There have been other factors more recently with what's been going on in Ukraine that have been supporting some commodity prices, but it's fundamentally a planned commodities. In terms of the other risk, I mean, obviously they can have mining accidents and things can go wrong. The other sort of risk that worries me about BHP, and not worries me because I've got no evidence for this, Peter, is if it does a major acquisition. And that's not to say BHP shouldn't do acquisitions, because mines are wasting resources. They run out eventually, and mining companies have to replenish their reserves. But the history of major miners buying at the top of the market, Peter, is pretty strong. So I think any acquisition would need to be very closely perused.
Okay. What are the actually analysts saying about the company?
Look, the analysts look like BHP, Peter, but think it's overvalued. On the screen in front of you, you can see the the forecast from the major brokers, and you can see the current consensus price is just under $46. That's about 9% lower than the current market price. They're not negative on the stock, but look, the biggest factor in terms of broker forecasts with miners is of course their forecast about commodity prices. They're using a much lower iron ore price than the current spot price you'd expect, but they're seeing at the moment as being fairly fully valued.
Okay. The bottom line, Paul.
Well, look, I think there are other factors. I think despite the analyst view, I like BHP. I've been liking it now for some months, Peter. I think the merger of the assets with Woodside is going to be a bonus as well when it happens in June. I'm not sure I'd be jumping in right at the very moment, but if I didn't have any BHP in my portfolio, I'd be very worried. And as I think a lot of investors are still underweight, I'd be looking for opportunities to add BHP to your portfolio.
And that's Switzer Investing Insights, brought to you by nabtrade. Thanks for joining us.